The open question at the moment is how far that disruption flows into sort of broader diplomatic relationship and feeds into real geopolitical destabilisation.
What's happening in Congress? What's happening with the Democrats? I don't hear any pushback.
It's been hectic, it's been a rollercoaster ride.
I think it's a 50-50 toss-up right now whether we have recession or we can eke through that. The collateral damage being done in all of this is massive. They're in for a rude awakening. Welcome to another edition of What's Brewing with Matt and Guy. So Matt, we seem to be in a world of disorganized chaos wherever I look. Am I missing something? Can you give me some reason behind the chaos?
Well, your problem, Guy, is you're tracking markets day to day and you've got skin in the game there. So you're on this roller coaster. I'm sort of stood slightly aside and looking at where it ends up after the loops we've seen over the last couple of weeks. I think there is a logic to what is going on. I think it might not be a logic that we like from an economic perspective, but this is an administration in the US which is trying to implement policies to reshore productive capacity. And if we take that seriously, and I think everything we've seen so far says we should, then we have to be a bit patient about how that plays out. There will inevitably be disruption in terms of trade. I think the open question at the moment is how far that disruption flows into sort of broader diplomatic relationships and feeds into real geopolitical destabilisation.
And we've certainly seen that in terms of the volatility in markets. But one thing before we come back to them is, we keep hearing about Trump doing this and Trump saying that. What about Congress? Is this just one man ruling the world, as it would appear looking at the newspaper headlines? Or what's happening behind the scenes? What's happening in Congress? What's happening with the Democrats? I don't hear any pushback.
So look, one of President Trump's special powers is his ability to dominate news flow. And I think this is something that we are seeing in spades at the moment. This is performative politics as well as very personal politics. And that's the strength of the guy who sat in the Oval Office at the moment. So not a surprise that every time we wake up in the morning, the headlines are about him, about President Trump. But also it is true, I think, that we're in a peculiar place in terms of the appetite, ability of Congress to challenge the executive power. We've got a president and a cabinet around him who are clearly very keen on optimizing what they can do without having to go to Congress. And so they're being smart in the way that they're deploying policy. So all of these tariffs that we've seen are being launched under emergency powers that allow the president to avoid going to Congress for any permission. None of these powers, none of these rules that the current administration are using are new. They go back decades. I mean, some back to Nixon, some back to FDR. Yeah. This is not new.
They're just being used more aggressively this time around.
Exactly. And so we'll have to wait and see how the Supreme Court decides whether or not this is okay, or whether the administration is overreaching. But even then, there's a question about the political appetite, particularly of the Republican caucus in Congress, to challenge an administration who won a popular vote back end of last year.
But one thing, and we've spoken about this in the past, and I was of the belief then and I am now, was it may not be Congress that constrains President Trump. It was ultimately going to be the financial markets. Now, one thing has changed since we last spoke, is that we've begun to see that.
The bond markets came back into view and
the bond
asserted
market shouted. Yeah. And we not only, of course, we saw the equity markets back sharply, best part of 20%, but as you say, it was a mighty bond market with yields rising, not forward. Remember, we had Bassett saying that he wanted long-term yields to come down. He was less worried about Fed policy. Well, actually, these longer-term interest rates have gone up, and they've gone up meaningfully. And I think that in combination with the decline in equity markets, that has changed the narrative somewhat. We've now gone from the stage of just having these kind of blanket initiatives, these kind of crazy numbers applied to all countries. We've had this pause for thought, at least. At least we've bought some time. So Matt, the 90 days that financial markets, I think, have forced the administration to consider in terms of the tariffs or the reciprocal tariffs here. We still have the 10% blanket tariffs, but how important is that 90 days? Are you expecting anything really meaningful, or is this just a case of kicking the can down the road? 90 days time, we're back where we started with these very big numbers being applied across the globe to imports into the United States.
So look, first, I think it's extraordinary that we are talking about a 3-month breathing space as being some sort of transformational approach here.
Well, you take anything you can get right now.
Yeah,
right?
Exactly right. We were all at the edge and are so glad that we're not being pushed over that edge, that we're happy for any respite.
Yeah.
And I think that in and of itself is just a weird place to be politically. It's not normally the way governments look to run things. In terms of what we're likely to see over the next 90 days, I just flagged that we are looking at theoretically 70 plus trade negotiations. I mean, even if you have the EU, so 27 states negotiating together, you're still, up over 40 different negotiations that have to be run.
Place, yeah.
And I do not see any way that can be achieved within 90 days.
China played hardball. They said, look, we're not negotiating. We're going to do tit for tat. It's the U.S. consumer, it's U.S. companies that are effectively going to pay for this. Sorry, Mr. Trump, it's your problem. That's not likely to be the case in the rest of the world, or is it? Do you imagine anybody pushing back? It seems if you push back, you get hit even harder. Is that what we're likely to see? So there will be compromise. Ultimately, it will be other countries being compliant with U.S. desires.
So you've seen Japan and South Korea move very quickly to try and get to the negotiating table. That reflects their interest in ensuring that they reduce the pain for their exporters. And I think we'll see the same pattern around the globe.
Yeah.
I think the issue is working through from other countries' perspective, what is it that you can put on the table that will buy you a truce with the Trump administration? If the end game here is reshoring manufacturing into the US, on the face of it, and look, you're the economist, you tell me, this looks to me incoherent. I mean, I don't see how that happens.
Not only do I think it's incoherent, I'm not sure why you would want it. I mean, yes, the trade deficit was maybe a little bit too large. You might want to bring that in a little bit. But remember, manufacturing jobs are not the best jobs. In fact, it was a Cato survey, I think it was last year, asking people, would you want to go back into manufacturing from your current job? I think only 20% said yes. Remember, this is kind of monotonous, often tedious work.
It's done by robots these days. I mean, let's be clear.
And I mean, that's the really important point, is that when you look at manufacturing output in the US, it's still very high, but it applies a lot less people. And you heard Lucknick saying that he wanted American workers to be screwing in tiny screws into tiny gadgets. But is that a great job to have? It is automated. And therefore, even if you bring back some production capabilities, all of these people who think they're going to bring back jobs and it's going to go back to the 50s or 60s, they're in for a rude awakening, because manufacturing today is not the way it was back then. And I think that's one of the big challenges that the administration now has. What is their end game?
I think this is the key thing that we're missing at the moment, is a clear articulation from the top, from President Trump, as to exactly what success looks like from his perspective. Now, he may be keeping that open deliberately because it gives him flexibility to claim victory when he gets concessions. We saw that a bit in the first term. There is the art of the deal, if you like, and part of this is setting up a very aggressive start point, and then you claim victory when there's a bit of movement from that.
But I think, unfortunately, Matt, the collateral damage being done in all of this is massive. Whether it's about the desire for a company to invest in the United States, how do they know what the environment's going to look like in 1 to 5 years' time? For consumers, about investing, consuming, they don't know what it's going to look like in 2 days' time, never mind 2 years' time. So I think the challenge the administration has now is, how do you make sure the US doesn't go into recession? I think it's a 50-50 toss-up right now whether we have recession or we can eke through that. But this is not a happy environment currently.
So look, you can paint a very negative scenario coming out of this. Further escalation with China, big interruption to the imports to the US in consumer electronics, in batteries, in textiles, etc. And that all flowing through into inflation and a negative impact on US consumers. You could look at nightmare scenarios of aggressive retaliation from the European side, sort of compounding that. But there's also, possibility that the clouds part fairly quickly. You could see, and it's not obvious at the moment what the path to this is, but both Xi and President Trump benefit from being in a position where the two of them can deliver their countries to the table.
Old optimist, you. That would be nice. The parting of the clouds would be a great thing. Sadly, I just see dark clouds with very few even silver linings there. But it could happen. But Matt, I also want to ask you about the rest of the world, because it's not just about US and US tariffs that we're seeing right now. Is that looking any better? I was more optimistic, speaking about optimism, the last time we spoke about what was happening in Germany. This massive fiscal initiative coming through, 1 trillion euros of spending over the next 10 years. Are you still optimistic? Are you as optimistic as I was, or should I be even more optimistic given what we're hearing?
Look, I think the political mood music in Europe is positive if you're an investor. I mean, there is a laser-sharp focus from Brussels at the moment on ensuring that Europe remains an attractive destination for investment, for capital. We've seen the conclusion this week of the coalition agreement between CDU and SPD in Germany, and that reinforces a desire to reduce energy costs, to move forward with energy transition, to make doing business in Germany easier and simpler. I mean, none of it is dramatic and revolutionary, but it's all pushing in the right direction. And the noises that you hear from politicians in Brussels, it sounds much more like they understand the need for quick action and to support competitiveness.
And your conviction level and actually getting things done as opposed to talking about it, how has that changed in recent weeks?
So look, the one thing you can guarantee about Europe is things will move more slowly than you would like, and it will be more complex than you would like as well, certainly from a business perspective. So none of this is going to be overnight, and I think we have a very different time frame when we're looking at the build out of European competitiveness than we do, for instance, to resolution of tariff disputes. We're not looking at 3-month cycle here. So I think we need to look at this over the longer run, and we need to be realistic about what is possible to achieve quickly at a European level.
I mean, President Trump is trying his best to make Europe great again. For the broader Eurozone, we spoke about Germany, but is there still optimism there? Are they still able to reposition their economies to increase the growth dynamic, to be more productive?
I think so. I mean, why not, right? You have a highly educated workforce, you have big manufacturing capability within Germany.
And is a political desire there to make this happen in Europe? Has it brought the European governments closer together?
Two different things, right? Is the recognition of the need for action and the potential opportunity for Europe to benefit as the US makes things less certain for investors there. Does that mean you're going to see peace and harmony between different capitals? Look, let's be realistic here. But you don't necessarily need that. I mean, this is the structure of the EU 27 is designed to allow reduction of single market barriers, to promote common action, recognizing continued national differences. So look, there are a couple of very big challenges in front of the Europeans immediately. One is how you step up defense funding, step into the breach that's been left by the US, making very clear they're no longer going to be there. So that's a pressing issue. And we may see some creative approaches to financing security and defense. And that could create templates which are very helpful in other areas as well. We also have energy transition as the sort of medium-term challenge that Europe really needs to get its hands around. If it's going to have competitive industry going forward, you can't be carrying costs of energy that are 3 times what your competitors are paying. So that's another significant challenge. They've set out a pathway from a European Commission perspective, but that's a multi-year approach.
And look, I'm more optimistic. I mean, I think this year for Europe generally and the Eurozone, I think it'll still be a challenge because of the tariffs and the uncertainty for 25. But when I look to 26 and beyond, I certainly see the positive tailwinds beginning to come in from that, particularly around the German spending and initiatives there that growth can pick up. But I just wonder, is there anything else? I mean, we speak about the world, we've still got a lot of challenges and complexities and big issues there. Look, what's top of your agenda?
Geopolitics is much broader than just trade. And there is a risk that we all become so obsessed by tariffs that we forget about the other risks that are out there. And unfortunately, I don't think that those risks are reducing. If anything, they're moving in the wrong direction. So no sign of a ceasefire or anything meaningful in terms of Ukraine. We have the war in Gaza and pressure on Iran picking up, unpredictable how that's going to play out. And of course, the evergreen tension around Taiwan, South China Sea, which as trade tensions escalate between China and US, you have to worry that the risks of a sort of kinetic conflict, to use the terminology that seems current at the moment, might start there. So look, the rest of the world is important. Trade isn't the only game in town. But let's hope that we start to see calmer waters as we move through the year.
And certainly, I think to be fair to the Trump administration, I think they're realizing just how difficult the whole geopolitical situation is, the global tensions. These have been issues for decades and decades that have never been resolved. So I think it would be unfair to say that it was all going to be resolved with one phone call.
It's easy to forget that we are only 3 months into this administration, right? It's been hectic, it's been a roller coaster ride, but this is just one small segment of a 4-year term. So there's a lot of this game still to be played.
Well, let's hope things settle down. Matt, we're going to have a lot to talk about. Remember, to all our audience, please continue to like and subscribe. We've got a lot more coming up. We hope some of it will be good news, and we look forward again to speaking to you very soon.